Good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. Trading session is about to start. We've got lots to talk about. I know you guys are probably tired of hearing about the debt ceiling. We did have the Senate actually vote to press it out until December. So the going out of business sale for the banks is going to continue for another month. It's not necessarily a going out of business sale. That's kind of a joke. But what I think is going on is they're just trying to spark demand and borrowing the dollar before interest rates would go through the ceiling if, well, let's just say if they let us hit this debt ceiling. So we're going to get into a lot here today. I'm going to go through a lot of news. I'm going to go through a lot of different things. We've got a lot of trades running. Non-farm payroll just happened this morning. And, well, let's just say the jobs numbers came out a little bit light. However, the unemployment rate did fall here pretty substantially. So I'll get into a lot of that here today. Just want to make sure we cover everything. I want to make sure you guys can hear my voice, see the screen before I get into too much detail here. Make sure I've got the questions box up and rolling. Perfect. Thank you, Deva. How are we doing? Rona May, Marina, Evan. Seems like we are ready to go. Perfect. Let's go ahead and get things going. I got to cover my base. This is a risk disclaimer. And what it says is if you put your money in the Forex or you put your money in any investment market, then your capital is at risk. You have to risk it to get the biscuit. There is absolutely no such thing as a guaranteed trade or investment, and you will see me trade with a stop loss every time for that reason. So let's go ahead and keep on rolling. I am going to be trading a live account in this room as well, so you guys will actually get to see me make decisions that actually, are going to have money, real money attached to them, which I think is, probably the greatest favor I could do anybody getting started trading. But reality, if you do have questions, I've already told you I'm going to talk about a lot of stuff in here. Please, please, please slow me down in the chat box. Ask questions. Silence is violence. If you have a question, a lot of other people probably have the same one. There are a lot of resources that we do provide here at 123Trade. And, a lot of this stuff is on our website. I'm going to pull the website up here in a moment and go through the news. Our primary function here is to help get regulated, secure brokerage. And, well, if you're in this live session, you've probably already done that. So that being said, now you need to know what to do next. Okay, I have the brokerage account. Now what do I do? Okay, so that's really what we want to help you through, is really what to do next and how to take you from being a 1 to a 2 and a 3 to a 4 and a 5 to a 6. That's really what we want to get you to. Okay, so we're going to help with charting connection and setup. I'm going to show you guys how to use a lot of tools in here. I'm going to try to keep the analysis classic. I'm going to do classic technical analysis in here. I'm also going to show some robots in here. Depends on what people need to see. But that being said, we're going to do lots of training and analysis in these sessions on Fridays because we want you guys, well, to be good risk managers. And that's what trading is really all about. We used to go through all of these topics that are on this list here every week. And, placing your first trade, you guys are going to get to see me place a bunch of live ones. So you do whatever you want. I'm going to make whatever decisions I want. That's pretty much how the world goes. At least it should. But that being said, if you want to know more information about any of these topics, check out our website. And if you click on this button that says YouTube here, the recordings for these sessions will be here 30 minutes or so after I put them in YouTube. Generally, if you are looking to get them as soon as they come out, because usually there's not going to be a ton of time before the market closes on a day like today, then you should probably come here and click this subscribe button and subscribe. That way you can get notifications from YouTube directly, and you don't have to wait the extra 30 minutes for it to show up on the website. But there's also a lot of education down here at the bottom. If you want to understand who controls the market and why it does the things that it does, when Congress does something here, or what maybe the central bank's motive might be, okay, then by all means, watch this video. You'll be glad you did. Equity management, I'm going to talk about in here a ton. I want to make sure people know, really how to figure out what lot size to trade. Okay, so lots of important information in here. You want to know more about how to use the charting software, how to run robots, how to use MetaTrader 4 or Smart Trader, anything. Come down here and check this out. But let's get to the cool part. I want to get to the news. And essentially, I used to do a lot of Google searching every day to figure out what's going on in every major economy of the world. And now I don't have to. We built this all on our website here. So all of it kind of pulls in the top articles from each of the searches I used to make. And it does it, automatically. And you can just look at this here, and it's got news from today. We added 194,000 jobs in September. That is a far cry from I want to say they were forecasting another 300,000 on top of that. So it was a weak month is really what they're saying here. So kind of soft in the job creation numbers. Okay, so not terrible, okay, because when you come over and you look at the calendar itself, if we look at Forex Factory maybe, I'll just pull this up, because the US dollar is going to be a driver for most things, just because, well, for example, if you want to buy barrels of oil, you have to buy dollars first to do that. So generally speaking, going to be very important, going to be a driver for the whole world. I've got to turn off a notification thing I've got happening in my ear. It's driving me nuts. I think we're going to close all these other windows out here. Sorry, I got a lot going on. Bear with me for a second here, folks. Just trying to stay focused here. All right, perfect. So we look at this here. Unemployment. Okay, this number, the last time we declined toward this number was back in 2017. So this is a very good sign. This means less people are relying on the government for their paycheck, which is more than likely just because they're not eligible anymore. Because at the end of the day, we still have 10 million open jobs in this country, which is insane. Okay, so that being said, there are a lot of open jobs that are just not getting filled. Actual average hourly earnings going up. This is a good sign. Typically earnings have been kind of weak years in the past for a long time, but earnings look pretty strong. So to me, yes, we didn't get quite the bump we wanted in jobs this month, but they did revise up last month. Looks by at least, 70,000 jobs or so. Okay, so not quite as bad on the NFP number, the employment change number as we had anticipated. Canada came out very strong. And, if we come back here to our news page, I want to take a look at Europe. China digs in on coal, oil gains as energy crisis deepens. Okay, so that's not good for Europe. All right, fix its rare earth import dependency. Yeah, they're going to be dependent on China like everybody else because we keep giving them all the rare earth access. And it doesn't seem to get any cleaner. A lot of people talk smack about Donald Trump wanting to buy Greenland a few years ago. But that's where a lot of the rest of the rare earth is. And the whole purpose of that was so that we didn't have to rely on China for that. But, that being said, seems like they're going to keep having to rely on China for that. Global tensions hurting climate unity. Of course they are. Of course they are. If you tell people in certain countries that they, can't drive their cars, and other countries that are also part of the same pact can, and they have no limitations, then yes, people are going to be upset about that. And that's just how it works. It's called equality. So people get disappointed when that doesn't work out. So Europe is still kind of a mess, in my opinion, politically speaking. And there's really just kind of a lot going on there. No real big reason in my mind for there to be massive demand in Europe right now. The Australian economy, okay, this is going to be very dependent on what's happening in China. Same thing goes for New Zealand. And, basically we could go through all this news. I want to simplify this a little bit and just come over here to the this week. We're just going to look at the high impact announcements. Oop, hold on. I clicked the up next button. That wasn't what I wanted. This week, apply. And I'm going to get rid of the, I just did the same thing twice. Sorry about that. This week, mouse is moving faster than the brain. Let's go ahead and filter this and get rid of orange, apply. Okay, so OPEC meetings happened earlier this week. Increasing output, that means they're going to push oil prices down. RBA rate statement. We can go ahead and just click on this and see what Philip Lowe said down there. Okay, conditions for a rate rise will not be met before 2024. Okay, that is a big deal. That means that they're a couple of years behind the US. That's weakness on the Aussie dollar and probably the NZD as well, just because they kind of, well, let's just say they kind of rely on one another. They're very close. They do a lot of business together. And really, that's just how it works. They got to keep the money relative and comfortable so that they can continue to sell as much wool and milk and whatever else it is that they sell between one another. But let's go ahead and get this back to where I want to be. So RBNZ rate statement, probably not going to be a whole lot different. We just looked at this here. Monetary stimulus did get further reduced, so that may be strength in the NZD. Okay, so if they're reducing their stimulus, they still have stimulus, so that's still bearish against other economies, but I think maybe not as much against the Aussie dollar. Okay, and then other than that, we're just looking at, you know, U.S. jobs report numbers for the most part. The private number came out incredible on Wednesday, so this could mean that, you know, maybe that's why they revised up this past month. You know, it's very odd that we get such different numbers from private industry versus what we get from the government. A 300,000 job difference is pretty significant, to say the very least. But I'm looking at strength right now in the dollar. I'm looking at kind of some weakness in, I would say, Australia, New Zealand versus the dollar. Really, I'm looking at dollar strength in general because I'm still hot on the debt ceiling. And those of you that don't understand what the debt ceiling is, basically it's like a limit on the government's credit card. Okay, and they're only allowed to spend, I'll pull this up real quick and I'll just show you guys the US debt clock. Okay, so I'll pull up the debt clock so you guys can get a good look at this. Try to make this a little bit bigger so you guys can see. I believe you guys are still looking at the right screen here. Looks like you are. So we're at 28.85 trillion roughly, according to this. Okay, the limit is 30 trillion. Okay, they've already told us we're on schedule to hit this. Initially, it was on the 1st of this month, and now they're saying it's the 18th. They're also talking about, well, the Senate pushed through an extension on the debt limit so that we can't really hit it until December. Okay, so they're just going to push it out for a couple of months. Okay, that has not yet passed in the House, so we still have to have the other half of our Congress, you know, ratify that and make sure that, well, we don't hit the ceiling. Okay, so the thing that happens if we do hit the ceiling is what people need to understand. It will be much more difficult to borrow dollars if we hit the debt ceiling because it will do a lot of things. It will hurt our credit rating as a country. Okay, so if you're looking to buy a house, for example, or you want to buy a boat, or you need to do anything that involves borrowing money and you want a low interest rate, you should hurry up and do it. Because, for example, I'm closing on a house on Tuesday, and if I had locked my interest rate 3 days after the day that I did it, my interest rate would be an entire % higher on my mortgage. Okay, and the debt ceiling hasn't been hit yet. I did that 2 weeks ago. So interest rate is going to continue to climb. It's going to become more and more, well, there's going to be a lot more demand. At least there should be. When it comes down to economic theory, there should be a lot more demand of people trying to get dollars before they can't. Okay, so the date that they wouldn't be able to do that would really be, well, assuming that they move everything to December, would really be all the way in December. So that gives people time to reload. Okay, so anybody that wasn't already ready to go to make a massive investment before the debt ceiling hits, now they have until December. They've got all the time in the world to find a house, buy it, and close on it in that period of time. So what I'm thinking is that that's exactly where I think the dollar is going to go. I think the dollar is going to continue to rise. And we've been looking at some sideways movement here for the, well, last week. And I've got a bunch of positions open. And, you know, a lot of people get nervous. Say, oh my gosh, I'm going to get out of this trade. Nothing's happened yet, which I think is kind of funny because reality is you're talking about a market that moves $6.6 trillion per day. Something is always happening. I can promise you that something is always happening. Gridlock, as in the market not moving, usually means it's about to make a big move. Okay, so that said, let me make sure I'm not logged in here. Let's get logged in. That's going to be important. I'm not buying anything. Let's get back over to the homepage here. Here we go. charts. I shut my computer down for the first time in a few days yesterday, probably a couple of weeks actually. I never shut my computer off. I run robots. I don't use the VPS. But anyways, we're logged in. It's loading up. And actually, I might as well show this dollar real quick. I've got the dollar up on this tab up here, top right. Make sure we're connected to my account also. Let's do that. If you guys don't know how to connect your account and you're watching me do it right now, let's see, beat the market. This is a live account I'm going to trade. You guys watch me. All these trades that are open here are live also. And a lot of people would be terrified right now. Oh my gosh, 300 pips. Okay, that's $30. Okay, I don't really, for lack of a better way of putting it, I don't care about 30 bucks. And I never will. Okay, so that's the reason why I'm going to sit in all of these trades and wait until I win. And I'm going to manage my position. You guys are going to see how I'm going to do that in this session. And the reality is that I anticipate winning these trades. We'll just put it that way. Otherwise, I wouldn't be in them. We haven't hit my stop losses by a long shot. So let's go ahead and get to the dollar first and give you guys an idea. I'm long on the dollar. Okay. If you guys didn't see that, I'm long on the dollar right now with all those live trades. Okay. So I'm going to crunch this index down. And this is basically just, you know, the dollar against everything. Okay. So what I want to pay attention to is really what the long-term trends have been. There was a long-term trend there, okay, and then that trend broke, okay, just to show you guys what I mean by that trend broke. We had a 1, 2, 3 happen here, okay, this is a 1, 2, 3, okay, that's what that is, okay, so I'm looking for another one of those, okay, and it really just happened, okay, so let's go ahead and draw the new trend that happened. Here you go, okay, so that happened for a few years. I was really dumbing this down to 2 lines, you know, what the trend should be. And, you know, we did the backside test on the bottom here. This right here, this is what I'm talking about. 1, 2, 3. Okay, I'm expecting something similar to happen on the other side, on the way back down. Okay, something like that. Okay, it may not be perfect, may not look like that, may never break out to the bottom. But I think a backside test is very likely for a lot of reasons, because even if you're not a trend trader, maybe you are a range trader. Okay, then maybe we dump this line here, okay, and I show you guys the range that's existed for the last few years. Okay, so let's zoom in. I'm just going to get a box on here. We're going to keep it real nice and simple for everybody. Okay, and what I'm going to do is I'm going to use my eyeballs to figure out where the top of this range is and where the bottom is, what prices really matter, and really what ones might be closer to where I'm at. Where's the next new high? Yeah, there's a close price that happened there. That looks like a popular price to me that the market might hit again. And I say that because it's hit it 1, 2, 3, 4, 5, 6, 7, 8 times in the last 7 years. So it hits it every year. And it hasn't yet this year. Okay, so that being said, I'm going to anticipate a rise to the top of our box. You know, maybe we can be a little bit more conservative. Maybe we aim towards this level here. You know, I just like to pinch closer and closer. This is a monthly time frame we're looking at. So if I zoom in, okay, this has still got, you know, in my mind, another week or two of up movement before we raise the debt ceiling, and this thing might fall like a rock, okay? Because if they raise the debt ceiling, which is what they're probably going to do in December, then that means weakness for the dollar. So in my opinion, you know, market manipulation is all about psychology. And everybody wants to think that Mitch McConnell's the worst human on earth because he's going to let the Americans default on their credit. What a terrible guy. And then there's also the people that, you know, really want us to raise this limit. So, I mean, there's very polar, you know, as soon as they said that we were going to push it out until December, everybody starts talking about how Mitch caved. He caved to the Democrats. So it's very polar. He's either caving or he's the worst person on earth for not caving. So watching the news here is really stupid lately. I don't really know how else to put it, but they are just trying to mess with us. So let's go and look at something here. Let's go look at something we can actually trade. And I'm going to pull up the USDJPY. Okay, so the dollar yen. Let's check this thing out. And I've got a bunch. You guys can see I've leveled into this a bunch. Okay, so my stop loss is below here. I'm going to go ahead and get rid of the active positions I've got going, because you guys can see I've got a bunch of them. All these green lines here are entries. Okay, this blue line that's above is actually another entry. Should it get there, that's a buy stop that I think I have set up. Fun part is you know, we've already made 60 pips in the session since I started talking. So for those of you guys that freak out about pips, okay, it's really about this dollar number over here and how comfortable you are with that. Okay, so that being said, things are going our way. Feeling good about it. Let's go ahead and get rid of all these lines here so you guys don't have to see all this stuff. Let's go to chart settings. Go ahead and dump all these pending open stuff. Save. I just want to give you guys an idea where my targets are. Okay, so I went to the all time frame. I want all the data I can. And one thing I want to make, you know, pretty clear cut on here. Okay, there's a lot of ways to do analysis. Okay, this was the trend for a long time. Okay, you guys see that breakout? I showed you guys a 1, 2, 3 on the dollar over there as well. There's another one of these right here. Okay, and we broke out of that too. So it's kind of working its way up. Okay, there's lots of ways to look at this particular trend in general. You know, some people are going to look at this here, and I've shown this in this session before. You know, this is what the trend was, and it broke, and then the market fell. You know, and this was the trend, and then we broke that a little bit, and then it fell. And you know, that was kind of what we were expecting to happen here. Okay, has not yet happened. Okay, and it does look like we are making a mad dash towards the north. So there's two ways of looking at stuff. I've already showed you guys the counter trends that have happened. Okay, I also showed you guys a rectangle on the dollar here. So I want to look and see where the heavy levels are. Where does the market like to go and touch? Okay, where is the finish line for the market? And you know, really, we haven't hit this price up here in the 114, 115 range in a few years. Okay, all the way back since, you know, 2018, 2017 we did it. We spent a lot of time tapping that price, you know, all the way back to 2016. So there's a popular price. We are making a move towards, let's get down to our day chart. Okay, thing that I like to pay attention to and try to keep things simple for myself is that this thing is making higher highs and higher lows. And just to show you guys what I mean, there's a low, here's a higher one, and here's a higher one, and here's a higher one, and here's a higher high, and a higher high, and an even higher high. Okay, so I think this thing's got legs to come up higher. I want to know how far. I'll measure with my Fibonacci tool. We haven't quite hit that level yet. Okay, end of the day, there will be multiple Fibonacci's on various time frames. Okay, so if we look at this here, this is kind of telling me that we could get up to this 116.13 level. Wouldn't be crazy surprised if we did that. I'm going to sit in this. I've got 5 of these trades open. You guys probably want to know what to do if you're not in one of these trades. Okay, hasn't hit the 382. Depends on what time frame you're talking about, Ray. That's just like your opinion, man. And that's what you guys need to understand about trading, is that it is always going to be your opinion what is going on. There is no fact of what it's going to do next. Okay, the only thing that there will be fact of is where you plan to get out and where you plan to get in. Okay, so yes, I would love to say that I'm right all the time, but I'm not. Okay, so that is why I trade with a stop loss, just like you should, because being right 100% of the time is stressful. I don't know if you've ever tried to do it with your spouse before, but being right doesn't usually work out well for you all the time, at least in my own experience. But that being said, okay, we've got lots of fib levels here. It does look like this one has touched the 382 raise. I'm not sure which one you're talking about. But regardless, okay, so if we do hit our extension level above, okay, that's up here at, you know, 113.898. So about 10 pips shy of 113. So 130 pips from here. Okay, it could come down first if you're not already in this position, if you're not already in this market. You know, this may be something that you look to enter as a buyer once it exits to the north of this AB. So that would be a buy stop. Okay, so your entry price would actually be above. And this is there's multiple different strategies in the world. Okay, not everybody is going to be, you know, getting in at the 618 down here, some people are going to want to get in at this lower price, maybe set a pending order below. Okay, so if you wanted to be conservative and trend trade this, okay, you would be looking to enter somewhere down here around this 110 price. Okay, selling from here does not make sense because we've already hit our 382. Just my opinion, and that's really what my strategy is. So I'm not going to try to sell this right now. I may try to buy it if it falls below here. Okay, if it comes down to the 618 level at 110.2, or I may look to buy it if it breaks out above my AB boundary, creates a new high, and I'll just have a slightly different stop loss scenario there. That's really what I'd be looking to do. And in my opinion, probably the more likely trade to happen. But, you know, that's just my opinion. It doesn't matter. So either one of these I think are great trades. If you want to wait for it to come down and get into the 618, or if you wanted to load into it above this AB boundary when we break our high and maybe have your stop loss a little bit closer. I'm already in both of these trades. Okay. I'm already in both of these trades. So I'm not going to do anything right now as far as opening another one. I've already got 5 positions open on this dollar yen. So I don't want to go too heavy on this one in particular. I want to go make sure I can diversify myself. I've also got positions open on the USDCHF, Swiss franc. So if we come over there, take a quick look. This one does look like it is trying to make a move upward, doing it real slow. You know, that being said, if we come to the all-time frame here, this one's a little bit more obvious what the long-term trend has been. It's been down. It's been very far down for a long time. Okay, so that said, you know, we could be looking at it could be time. You know, a lot of people like to call the bottom on things. I'm not really that guy. You know, this trend is going to be down until it's not. And that's really just it. Because we're getting lower highs, lower lows. Here's a high. Here's the lower one. You guys get the idea. Lots of lower highs have happened. Okay, so just because it's not falling as fast doesn't mean it's not falling. Okay, so that's really something that people need to understand. The Forex market typically turns like a cruise ship. Okay, this is not usually going to be something that, you know, it's just going to end up back all the way up at this price, you know, next week. This is a monthly time frame we're looking at. It would take years to get there. Okay, versus any move that's ever happened. The biggest move I've ever seen on this pair was all the way back here. Okay, this is a 1 day move that's right here. This range on this day was huge. You know, we're talking about, you know, 1940 pips or something like that on this month here candle. So if we come down to the day chart, I can actually show you guys that specific day. You guys can see what I'm talking about. This is it over here. Yeah, this is the biggest move that I've ever seen, and it's probably a tenth of that move to the top of the overall range, the prices we've seen for the last, you know, 20 years here. So that's a 1500 pip 1 day range. Okay, so that's huge. Okay, so let's get over to real time. Okay, so now we're looking at more recent. And this is might as well just look back to, you know, most of this year. This is since this summer, so this has been a few months. And if you guys can see something quickly here, it may make your life less complicated. But there is a low. Okay, here is a higher one. You see these higher and higher and higher lows that we're making, because I think that's a signal that I should be looking for buys. Okay, as long as that keeps happening. Okay, I'm going to keep looking for buys as long as we're getting higher highs and higher lows. You know, not necessarily going to be clean as everybody would like it to be, but that's not how the world works. Okay, the world isn't typically going to be super clean and easy to figure out. If it was, everybody would be millionaires and you guys wouldn't be listening to me talk right now. Okay, so that said, we did get a breakout here. Okay, I want to see where our Fibonacci ranges are. I'm just going to get a little bit of measure on here. The fib tool, what I use it for is primarily to figure out, well, where we are in the waves. Where are the heavy price levels? Where should I aim? And this particular one, I'm already in a bunch of trades on this particular currency pair, but I showed you guys a breakout style trade on the dollar yen a couple of minutes ago. This is a breakout. This would be a breakout. If I wasn't already in this, I would be buying it right now because It fits my breakout strategy. Okay, if I wasn't in it, I would literally be getting it now. I know people are looking at this and they're saying, oh my gosh, you're on the day chart. I can't believe you would make a buy from there. But looking at the risk reward looks pretty sexy to me. So that's really what I care about. If I can get 3-to-1 on my money or better, then it's a no-brainer. I don't even have to aim as high as I'm looking to aim on this chart. So if I come down to maybe my 4-hour time frame, okay, this one's a little bit, less aggressive. I would say we're not necessarily in breakout territory on the 4-hour, but that doesn't matter to me. We already broke out on the day chart, and my strategy is based on the fact that the large time frames control the small ones. And this is still a bullish move, making higher highs and higher lows, hence the higher Fibonacci ranges and the green buy zone in my fib range here. So really, if you wanted to be more conservative, the trade I showed you guys on and I'm already in this position. I'm already in a few of them. Okay, so I think I'm already bought at these lower prices as well. But that's really what I would be looking at if the market comes down, maybe reloading. I'm still looking to buy on this thing until they raise the debt limit. If they don't raise the debt limit, I think this thing could go very high, and be a nasty whip and be very bad for the world economy. But either way, I think it would go up in that scenario. At least economic theory would dictate it doing that. So I'm going to stick with my long positions here because we are getting confirmation that I'm in uptrend territory. I haven't really seen anything that says, hey, you should sell and get the heck out of Dodge, Will. I haven't seen that yet. So let's go ahead and look at this NZD Swiss. I think somebody asked me for this one last week, and we did read some news that the New Zealand overlords are going to be looking to peel back their stimulus, okay, which could mean some strength on this NZD. And I don't know if you guys can see this. We're on the 4-hour chart. We just kind of showed up here. I'm already long in this one, okay? But I'm going to go ahead and draw a quick shape here real quick for you guys. But you guys can probably see we've got a little bit of a crown here, a really nice looking crown. I mean, maybe we'll just draw this. Check this out, okay? So there's our crown. You guys can see that. And we're right at the right tip, okay? In my mind, this is go time, baby, for a lot of reasons. It was when we were over here at this price, okay? It was really at the similar price right next to that also, okay? That was also buy time, okay? So we did get a higher high, okay? We also got this broken trend line here, just to show you guys. Okay, we did break that trend. This is our 1, 2, 3 that happens. Okay, so what I'm expecting next is for this move to really just head north. Okay, so I'm going to stick in this for, I think, quite some time. What I may want to do is figure out how far it's going to go. Okay, because just looking at this, you don't necessarily know exactly what anything's going to do ever. But I want to know where the critical price levels are and where the market has turned around before, where my Fibonacci levels are. Okay. And right now we're right at the edge of our AB boundary. This thing could come as high as, 68, which would be fantastic. That's 350 pips from here. Okay, so it doesn't really get any prettier than this either. I don't know if you guys have been looking for, how to find a trade that fits a trading strategy, but here's one right here. That's a 1. This is a 2. And here's our 3. Should be something like that. So I'm going to look to exit where I would rip the tape on life on this NZD Swiss would be up top at my green line, my blue line below here, current market price. Okay. And then if I need a stop loss where I might put that, this is really the long-term level that you would want that at. Maybe white's not a good color. Let's use red. Yeah, there we go. But yeah, essentially that is the position trade. Not everybody's going to be comfortable risking 200 or so pips on a trade. Let's come down to the day chart and see if we actually have to do that. And in my opinion, it does seem like the way to go. But, some people might be more aggressive. They might pull their stop up there to, 63.260. And now that's a much smaller risk. You're talking about maybe 100 pips or so. Let's actually just get the measuring tool on here so I don't have to think. 106 pips, $10 risk with a micro lot. Not super scary for a lot of people. Okay, that 100 pip risk to try to capture 400 pips on the top side feels pretty sexy to me. I'm already in this trade twice. And actually, I might actually widen the stop loss a little bit if I wasn't in this already, just so I don't have to worry about it, because I think this one's coming up. I feel good about it, but, you know, I want to make sure I don't get stopped out before it does that. It could linger around. It could come down to these prices and, you know, knock some people out and then go back up and hit the finish line up top. So I don't want to get stopped out, and I don't want to risk too much money. You know, a lot of people sweat about 100 pips or whatever. But at the beginning of this presentation, I don't know if you guys remember, I was down 300 pips, $30, whatever. Okay. I don't care about 30 bucks. I don't any more than I care about this number of pips, but we've made 100 of them back since I started talking 25 minutes ago. Okay. So you guys got to keep things in perspective. It's all about not over leveraging yourself. Okay. So as long as you follow that rule of, okay, this is how much I can handle, then you'll be okay. Well, let's go ahead and get into Euro USD. And we didn't really see any great news about the Euro. We're already bearish. I'm not going to go through all the long-term jargon on this one. I just want to start finding some trades because we've already done a lot of homework. Okay. And, you know, this was our trend, initial trend from the bottom here. We broke out another 1, 2, 3. For those of you guys that are wondering why we're called 123Trade, there it is. That's a 1, 2, 3 all day, baby. So let's go ahead and get our smart fib tool here. See where we are in the waves. Didn't quite get what I needed there. Maybe we try the next wave. And if this doesn't work, I'm gonna look on the weekly time frame. It looks like we just hit our extension. So we may be in for a little bit of a break. Okay, even though I do still want to keep a, you know, bearish look at this thing. You know, I may be in time for a little bit of a pullback. So let's go ahead and look at the weekly, see what's going on with the weekly. Okay, and this is a little bit of a different story. Okay, this is kind of showing me these lower levels, and really the one that I'm paying the most attention to is this price. Okay, we have not hit that yet. Okay, so I think that maybe, let's make this green. Actually, let's just get a green line on here. Let's get a couple lines on here. Then I'll just move these around and change these. All right, need our current market price. Okay, so maybe our extension level is one of these red levels below here, because that's really where I think we're headed. There's a ton of price action there. The market made a mad dash for that price, you know, in March of 2020 for some reason, and then it made a really massive move upward. So I think we come back and test it because it's been a really popular price. Okay, so I think that price is happening. Okay, so what I need to do is figure out where it makes sense to protect my risk. Definitely isn't where my red line is right now. So let's come into my 4-hour time frame here. And reality is, if I wanted to trade as close as I am, you know, this may not make sense. Unless you're already in this one, it may not make sense to get in. Okay, so it may be a situation where I look to, you know, maybe set a pending order. Okay, and I could look for some levels of resistance here, smart resistance. Let's go to the day chart so we can get a few less lines on here than we've got. All right, so we've got a couple levels of resistance here. Let's go ahead and set up what we would want to do if the world did exactly what we wanted. That's where I might want to jump in. Okay, and all I did was look for some resistance levels. We're at an extension level. This thing could go sideways. I don't have any reason to jump into this one and hurry up, because why would I want to do that? End of the day, I don't have to be aggressive. Some of you may be looking at this and thinking, wow, that's 130 pips above. We're at the extension level. Okay, so there are two ways to trade. You can trade with the trend and you can trade against the trend. Okay, so being that I'm not in this one already, I'll go ahead and set up a pending order here because I like this pending sell. It may not be ideal if this doesn't happen sometime in the next few days. I may just get out of the way on this one because I don't want to mess with the debt ceiling thing unless if they pass the debt ceiling legislation and that goes through smooth. I'm going to leave this open. I guess really we've got plenty of time for this to develop before December. Okay, so I'm going to set this pending sell for 117.36. Okay, my stop, my limit. Okay, I'm going to go ahead and just measure this out in pips because that's easier for me. Let's do 180 pip risk. for a 290. 180, 290. Sounds great. 180, 290. And then the most important thing to understand is this number here. How much money am I risking? I think we should do something small, like 18 bucks. So I'll do 0.01. I'm going to risk $18 on this trade. There's tons of play. So the market can move several pennies, and I don't have to care about it. I don't have to worry about it. So you guys can keep watching. I mean, we just made another 20 pips since I said something 5 minutes ago. Okay, so this is gonna be, you are gonna see pips move. Okay, the market moves a lot. Okay, you just need to figure out how much of that movement you can handle, and that's what this number really controls, is how much you can handle. You get to choose. Okay, so if you are freaking out about your trading account, it's your fault because you chose to trade too big. Okay, that's really what it is. And you've got to you have to take personal responsibility, because if you don't, you're never going to be any good at this. Okay, that's really important. And I'm telling you guys this because I love you. And that's really, something that I had to learn myself. It's not just the strategy, it's you, the person using the strategy. Everybody's seen a basketball. LeBron James is way better with one than I am. Okay, so that being said, okay, this is a little bit less cumbersome than having to dunk a basketball. I love the idea of you, Evan. Oh, you're killing me, man. Whatever. Anyways. Let's keep on moving. Okay, so some of you guys are looking at this and saying, Will, why aren't we buying this right now? Okay, so if I wanted to trade against the trend, okay, what I need to do is figure out, okay, here's our current market price. We're at our extension. Okay, that's the important part to understand. We're at the extension. Now the question is where do I get out? I can choose a level of resistance above, maybe right there. And I need a level below where I can protect my risk. And I may just do something tight, maybe do something like a 2-to-1 trade there. And maybe I just buy that right now, just like that. Yeah, it's cool, Evan. I appreciate that I could be in that echelon, though. But yeah, so let's come down to our lower time frame here. See if I've got a couple levels of resistance here below me, so I don't have to worry about this so much. Some support, I should say. I've got 2 levels of support that we kind of just formed. So I've actually, if I zoom out here, I've got 3 more of them. So I feel pretty good about this position where it is. I may actually, I'll just leave my stop loss right where it is. Okay, so this would be the buy position. Just back to this 236 level. Really not going to come any crazy further than that, in my opinion. We are kind of at our extension already now. So really, if I wanted to hedge myself and all these other dollar trades and trade against myself, then that's really what I would need to do, is just buy right here. That's kind of up to the trader. Personally, I don't like to hedge myself a whole lot. But you know what? Just to show you guys, I'm not afraid of this trade. The reason why I'm not afraid is because if I look at it and I measure and I say, okay, my risk is going to be 93 pips and my reward is 180. So this is a 2-to-1 opportunity. Okay, so I'll risk 93 for 180 pips. This $10 is now in the wind. And if that trade wins, then I'm going to end up in more than likely my other sell position we just set up. So I'm going to play both sides. If I lose this trade, goodbye $10. I'm going to have to cry about that one. Probably not. Okay, that's really the thing that I'm trying to get you guys into, this attitude. You guys need to understand your decisions can't matter so much. If that makes any sense. If all of your decisions are well calculated, but none of them is make or break. That's really what this is all about. None of my decisions are going to be make or break. Okay, I'm going to make a lot of decisions, but none of them are going to be make or break. It's never going to be, oh my gosh, if I'm right about this trade, then, oh my gosh, I could double my account today. I'm not going to do that because I don't care. I know that if I get 5% a month, I'm one of the best traders on earth. Because if you can do that every single month and do it in a really boring way possible, you are probably managing a hedge fund. Okay, so do you use Bollinger Bands at all? Occasionally. I don't really use them a ton. Some people swear by Bollinger Bands. Kind of depends on what I'm trading and what I'm trying to do. But for all intents and purposes, you guys are watching what I like to do the most. I draw lines, I draw boxes, and I use the fib tool, and I make sure that I can afford the decisions that I make. That's the most important thing. So a lot of people, okay, want to look at something other than the dollar right now, and I think there might be some pretty big opportunity on some things other than the dollar right now. I think the GBP JPY may be in store for a pretty nice move here sometime in the near future. If I can get this thing to pull up here. Okay, so let's go ahead and hit the all-time frame on this thing. Crunch this thing down. Get more real estate. Okay, so now we're going to get reeled in a little bit. Okay, so I've got this very sideways trend. I'll just pull a rectangle. Okay, I don't know if I've really just done something this basic for you guys in this session, but this rectangle shows high and low. And everybody knows, that you buy low and you sell high. So if I'm a bank, and I know that they've been trying to devalue the yen for 30 years or longer, then, I'm looking at this like, okay, well, I may buy pounds and sit on them for a few years because it takes a long time to get to the top of this box. I think there's going to be a fantastic move here. And I think the other reason why there might be is because we do have this trend line that is getting flirted with disaster with right now. We're just above it now. This could be very, very big, especially if, the world calms down. Especially if the world calms down. We've got lots of dollar strength happening right now. I know that people were looking at the pip count down here. If you've been following this, okay, we're down to 130. We're going to be out of the woods soon. I know everybody sweats about, being in the red, but that's kind of part of getting it. You're going to be in the red as soon as you click buy on every trade. So don't be such a spaz. I'm just joking with you guys because I am a former and occasional spaz myself. And, really, you don't want to live your life that way. You want to let the market do the work. That's why people get into trading to begin with, because I don't want to work. Okay. I don't want to work. Okay. All I want to do is let the market do it for me. Okay. So if we look at this here, we do have this trend that struggled to break, and it didn't. Okay. We didn't really close below here. So this is still, in my mind, an uptrend, because we have not created a lower high on the right side of this trend line. Okay, it hasn't been able to make a lower high over here. Okay, this is what I'm talking about. I need a lower high. Oh, maybe not. I didn't want to change my line color. I wanted a lower high over here. Okay, so if I made a lower high over there and we did something, maybe it looked like this. Okay, then I would be looking for sells here. However, it didn't do that. So I'm not going to look for sells. Okay, I'm going to be looking for buys, because this thing has been aggressively moving upwards, and something tells me they're going to raise interest rates in the UK long before they ever decide to do it in Japan. So if that's the case, if I'm a banker and I have billions of dollars, I might sit in the pound for a few years until they raise their rates so that I can make interest on my billions of dollars. Instead of, in Japan, where they've got negative interest rates, not quite as sexy of a return, and, you have to actually do work. Okay, so that being said, come down to a lower time frame here. Let's hit the day. This has been a big, massive uptrend, and, just to show you guys the counter trend that exists, because that happened. Need a trend line here. This is our counter trend. Doesn't it look like we broke it? It does to me. So, and it also looks like we've been up for 1, 2, 3, 4, 5 of the last 6 days. So, hey, lucky number 7, where are you at? Okay, let's look for some buys on this thing. Come down to maybe our 2-hour chart. We are getting higher highs, higher lows since, the beginning of this month. October's been pretty hot for this so far. So let's go ahead and see. Let's just pull this from October. There's our October trend. we hit our 618, and we might extend as high as this level above here. We'll get a current market price on there for now. And let's come down here to see where we've got some previous lows. And this is a breakout. Okay, so when I say it's a breakout, that means it broke out of our AB boundary and hasn't hit its extension yet. So I think that it comes to the extension, and I can buy it right now, is what this means to me in my brain. I might lose. I might win. That's why I'm going to measure. Okay, so 57 pips. Long hair, don't care about that. 57 for 78. Cool. 57, 78, and this is a smaller amount of pips. You know, if I usually risk $10 a decision, I can go ahead and risk 10 on this one. Click buy, and I'm in like Flynn. In there like swimwear, whatever it is that you guys like to say. I'm in this trade. It happened. Decision made. Olmec, 60 seconds on the clock. Now, you guys probably haven't seen that show from the early 90s. Legends of the Hidden Temple. But anyways, no more jokes for right now. Let's keep on keeping on with the analysis. Okay, so I am interested in this pound yen. I think the pound might actually see a little bit of strength given what's going on here on the chart. So let's check out something like the GBPCHF. Okay, because I'm already betting against the Swiss franc as it is. Why is it did they change the nomenclature in here? I think they did. Oh, there we go. They just moved the search bar. Anyways, let's come to the week chart. This is very similar to what we just saw. And you know, I showed you guys this counter trend break that happened. Okay, the last time that we had a big consolidation, like we did down here. And when I say consolidation, what that means, it just means the market went sideways. Okay. And after it went sideways a lot for a long time, it went up a ton. Okay. So that doesn't mean it's going to do that again, but that means it's probably going to make a big move after it finishes doing all this consolidation over here on the right. So the longer things consolidate and go sideways, typically the bigger the move after that you're going to see. Okay. So same kind of deal here. You know, if we come to this is basically all of the data here. You know, if you guys want to look at the range of all time, you know, lifetime data, okay, that's really what we're talking about. Pretty big. And everybody knows high, low. Okay, so this doesn't mean it's the bottom. Okay, we did make a lower low recently than we had 10 years ago. Okay, so this does not mean that it's going to be up and you should just buy it all the time. Because if you guys look at this, well, let's just say buying works out sometimes, selling works out sometimes, and I want to know when it makes sense to do what. Reality, the most awesome place to buy this thing is really far away and something that I might set a pending order for, but I'm not going to be able to do anything with right now. It's 400 pips away. That's where I would really love to buy this. Other than that, right now may not be a bad time either, but I need to look at a lower time frame and figure out, well, if that makes sense, if I can manage my risk. So let's get our blue line on our current market price. Okay, and if we do just keep rocking out this range that's here, this box, okay, and the reason why I drew the box here, okay, just to make this blatantly obvious for anybody, is that there's lots of turnarounds at the top at this price. So for whatever reason, that's the finish line, and it has been for, well, really every month since April. So if I know that everybody races to 128 every month, I want to race to 128 too. That's 170 pips from where I am right now. Let's come down to our 4-hour time frame. Maybe look for a, you know, I want to say a greedier entry, because if there's anything I'm going to be greedy on, it's my entry point. Not so much the amount of money I'm going to trade with, but I will get greedy on where I get in, because, you know, I want to be that. Well, let's just say we've got people from all over the world in here. Americans are typically not good at negotiating because, I don't know, just the way that business works here, you don't really get to negotiate a whole lot in really anything. Unless you're buying a car, and a lot of car dealers try to act like they won't negotiate until you get there and leave. You pretty much, if you want a car dealer to negotiate, you have to go there, show them that you have a lot of money, and then leave. Okay, so this is the same thing, only a lot easier. Okay, so this is an international room, so I would imagine a lot of you are better negotiators than Americans. I'm not trying to dog my American counterparts, but generally speaking, negotiation is just waiting for a better price. And, you know, we may need to do that right now. We may not. Okay, so let's pull our fib range. This is a breakout. Okay, so I might even be a little bit more cavalier on my stop loss and aim lower. I might scalp this. Okay, I might just look for this trade. Okay, because we did come down to our 618. It's already been back in the range twice. Maybe we just bet on it not coming back in the range. Come down to our 2-hour time frame, get a little bit of a closer look even. Okay, maybe I don't want to be quite in the meat of this market here. Maybe I want to be a little bit more, you know, maybe I am going to be a little bit more conservative. And I'll get in at these other turnarounds that happen below. You know, the last few hours has been a, you know, relatively strong downward push. But I think I did figure out what I want and where I want to get in. I'm going to set up a pending order. I'm going to negotiate with the market so that I can risk 43 pips to try to capture 70. Okay, so that's a very narrow risk. I'm not going to sweat about. Okay, so I'm going to set my pending buy order at market rate 0.262. Okay. And then my stop here, we'll just say 45. And we're going to get 70 on the top side. And this is something that could happen today and complete today. This could literally enter and exit today. This is not a big move on this currency cross. I want to say pound Swiss is going to move, you know, 100 to 250 pips a day. You know, if you look at some of these days here, this is 6 hours over here on the left, where we went from, you know, 127 all the way down to 125. Okay, so that's 150 pips in 6 hours. I'm trying to do half of that. Okay, so keep things in perspective. This could be a fairly quick trade. I'm going to do slightly bigger because it's a $9 risk, maybe $8 at that price. I don't really care about that amount, and that's perfect. That's basically what it costs to get a chicken sandwich these days. And if you can't risk a chicken sandwich, then you probably shouldn't be trading. Okay, so that's really the way that you need. It needs to be in your brain, because if you can't risk a chicken sandwich, there's really not a whole lot of decisions you can make that aren't going to stress you out, and the fact that you may not be able to eat because you made the decision. Okay, so psychology is the number one most important thing to understand. If you don't like chicken, then get a tofu sandwich, Ray. Whatever you want to do. One of those Beyond Meat things. That's what they really want you to get into, is the fake meat. They're trying to get people to stop eating beef because they're saying that it has such an impact on climate change. And they're really trying to push for Americans, I think, in particular, to stop eating so much beef, because we eat a ton of beef here. I don't really plan to stop, though. I think you're probably right about that too, Ray, but that's a little bit more polarizing than I will get into in here. But regardless, okay, so we are done with the pound. If you guys have something you guys want to see, I've got time to do one more before we get out of here. So whoever wants to go ahead and put a silver, you want to do silver? We can do silver. A lot of people want silver, it seems like. XAU USD, where are you at? Okay, that looks like a pretty bullish move that happened earlier with the non-farm payroll. Let's get to the high time frame. Actually, no, this is gold I've got. I need XAG. I don't know what I was thinking about. XAG. And this looks exactly the same so far. Well, let's come to the month time frame. And looking at this here. Okay. Crunch this thing down. We've got our long-term downtrend that happened. Okay, and then in between current times, since then, this is more or less what we had years ago. Okay, this was the range that we lived in for, I don't know, 4 or 5 years. Then we broke out of it, and we haven't touched it since. So what I think is that we're on our way back to it. The reason why I think that is because we have been for the last 4 months in a row. We've been falling. This month so far, we've got a little bit of a reprieve. The market has come up slightly. So we could see a slightly higher price. Nothing goes straight up, straight down. That doesn't happen. Okay, so, well, at least not continually. It doesn't usually go on forever or very long. Okay, so fun part is we're actually at our extension level below here. We came up to almost our blue level above, didn't quite nick that. So maybe if we hit our extension, we come all the way down to the red level below in this range that existed for years. But right now we could be seeing this reprieve, and I don't want to get caught trying to sell. Let's just say, like to make a joke in trading, never wrong, just early. Being early on something like this might be pretty detrimental to your pockets. So that said, we're at the extension. This is very much, in my mind, a place where the market might retrace and come up for a little while. But that said, I don't really think it makes sense for it to come up too much, because I am looking for dollar strength, especially if they're going to let the going out of business sale for the US dollar go on for a lot longer. So right now we did break out. I think these lower prices are coming. I don't think there's any reason to think that the dollar is going to be weak. On the weekly, super bullish candle pattern on the weekly. Kind of depends on what you consider super bullish, I guess. Everybody's going to be different. You're talking about this kind of spinning top push that's down here on the bottom, followed by this bullish engulfing candle ray. And I agree. The only thing about that is if you go back and you look at this bullish engulfing candle here and this other bullish candle that happened for 2 weeks in a row, followed by this massive fall, you know, there's no gospel in the world. I just know that this thing hasn't really come up for longer than 2 or 3 weeks at a time since, you know, before the summer. So until that game stops, you know, I'm not going to call the bottom. And we're really not at the price where I think that there's the most support. We haven't really hit the support that I think is really where we're really trying to get to. I think this price right here, okay, at 20 bucks, I think that's where we're headed. That's still $3 shy. And, you know, I think an incredible buy from that price, and I think a lot of people think an incredible buy. I don't think I got to really sell anybody on that idea. But really, it's the selling towards that price I think is probably a little scarier for people. Let's come down to our 2-hour time frame. So we've got a massive bull candle that just happened. Okay, so a lot of people are going to look at that and say, you know what, it's buy time, baby. This thing's going to come up for a long time. But you know, this, you're going to look at this over here. This is the same thing. This is an equally bearish candle that happened on September 29th. Doesn't seem to matter a whole lot. Okay, so let's get a good look at the trend and see if we're above it or below it. Okay, because if we're below it, I'm going to think sells. If we're above it, I'm going to think buys. And right now we're below it. Okay, so I'm thinking sells. I just need to figure out where. Okay, so that being said, let's get a little bit further out on this chart here so we can get a better look. But we are underneath our trend, and this trend started in May. Okay, so if our trend started in May and we're at a high price right now, you seeing a bull crown? I'm seeing a bull head and shoulders, Evan, because we haven't quite formed a new high on this right tip that you're talking about. So if you, Evan, I think you're talking about this right here. That was a really ugly drawing I did there, but I think that, yeah. So there's nothing wrong with that. You know, the thing is though, is that like there's another run right here. If you guys want to talk about bull crowns, this one was more bullish. You guys see what happened after that? Because it looks pretty scary. There's another one right here. Okay, there's another bull crown. Okay, so if there's another bull crown that's happening right now, maybe they're doing the same damn thing to us they did the last few times. That's really what I think is going to happen. I think we're headed downward. Okay, because I mean that pattern is happening. Okay, trading is not necessarily about what your strategy is necessarily all the time. Yeah, exactly. I really love the I like the damn dirty apes. You know, the what Planet of the Apes reference. But yeah, you know, the market does what it wants. Okay, it's, in my mind, I'm just looking for a pattern. Okay, and a lot of times, you know, the trend has to bend for it to turn around, but that isn't necessarily your confirmation that it's going to turn around long term. And a lot of people have looked at this and said, you know what, I'm going to buy this, but I'm going to sell. I can't trade silver like you guys can in my Forex account, so I can't trade this live. But I will come to my day chart, show you guys where I might get in, because I think that we're at a turnaround price right now. And reality is, I think you just need to figure out where to protect yourself. If you haven't traded silver CFD before, like you have in your Forex account, then please trade this in a demo account first, because the equity management is way different. You don't have anywhere near as much leverage. And if you don't understand how the risk works, well, let's just say getting surprised by how the risk works kind of sucks. So I don't want you guys to end up in a situation where you're freaking out about your trade account. But really, I think that this is a sell. I think it's a sell right now. I don't think that there's any reason to believe that this thing is going to be a long-term uptrend, at least anytime soon. But we are out of time today here, folks. And if you guys enjoy these trading sessions, then please, please, please give us a review. If you haven't already, come to the Google machine. I'll share this link with you guys. But essentially, you know, this is really the biggest thing you can do to help us, the team here at 123Trade. If you guys like the trading sessions and the information that we put out in here, then I just put a link to give us a review. We've got some good ones in here. I haven't been asking for these for long enough. I feel like we would have a heck of a lot more of these if I'd started doing this a couple of years ago. But, you know, generally I appreciate all the love. Appreciate you guys showing up here. I love doing these trading sessions. I love teaching this stuff and showing people, you know, more or less how the chart plays with your brain, and, you know, how the news tries to play with your brain. And really all it comes down to is making sure that you can afford the decisions you make, and none of them is a make or break. And a lot of people never understand that, and that's why they never figure out how to get good at trading. And that's really, and from what I have seen, the biggest difference maker for every trader out there. If you figure out how to manage your risk in a way that you don't have to worry about checking your phone every 5 minutes, then you can be real good at this. There's nothing complicated. I drew lines and boxes in here today, people. Drew lines and boxes. And I used an automated Fibonacci tool to measure how far things went. Ideas on how to get more capital to trade. Well, personally, I just work. And when I get paid, I add another, you know, I just invest in myself, just like I would in my 401k, except I have way more control than I do over my 401k. I have way more control. My 401k is very much like, okay, if the stock market's doing well, then, you know, my money's going to go up. If it's not, then, you know, it's going to go down. And, you know, that's really, I mean, to a certain degree, you know, if the whole market takes a tank, then I'm kind of in trouble in my 401k. This account is something that I can make money if my 401k tanks. I can make money in that direction. I can hedge myself. Okay, so really, it's just about growing things over time. However you make money is however you make money. Obviously, adding money by winning trades helps too. But, you know, really, if your account's small, you need to keep your expectations in range with what they should be. Try not to overextend yourself. But either way, appreciate everybody coming out. I hope I imparted a little bit of knowledge here today. If you guys haven't already, check out the Power Pairs ebook. I do think I did get that fixed. If the delivery does not work, then please let me know. Send an email to brokers@123trade.com. But otherwise, clock is ticking on the debt limit. You guys enjoy your weekend. Happy trading. Hope you guys make lots of money. You guys have a good rest of your day. Be good or be good at it. Take care, folks.